Hello, everyone. My name is George. Welcome to the class 10 of Company Funding 101. And now we're going to talk about alternative funding. Because we talked about traditional funding last time about how you get bank loans, how you get government programs, grants, what those are. And now we're going to talk about alternative funding methods. They are business finance that are not part of the traditional methods. And this includes crowdfunding, peer-to-peer lending, and revenue-based financing. And again, this is a double-edged sword that offers unique opportunities and challenges for business to seek capital. And first, I think we're going to talk about crowdfunding. I think a lot of people have heard of this term because it is quite common because it raises small amount of money from a large number of people. So for instance, if I raise $1 from every single person in the United States, that'll be like 30 million. And you'll be like, oh, I can give you $1. Oh, he can give me $1. So why can't like 100 people do it? So that's basically the logistics behind crowdfunding. That a lot of people buy your idea basically. And it's often used by startups and businesses looking to launch new product or services because it's an innovation and you know the crowd really likes to see that and really subscribe to that ideology to see something new being created by their money from their hands. And famous platforms, if you're thinking of using one, use Kickstarter or Indiegogo. Those are the go-to platforms if you want to do crowdfunding because people just give you money from there for a specific cause. And now we move on to peer-to-peer lending. You definitely have heard the term P2P. That means peer-to-peer. It means borrowing money from individual investors rather than from a bank. And this lending is facilitated by online platforms that connects the borrowers with lenders. So unlike crowdfunding, this is just a specific single entity. And usually it was larger sums of money than the crowdfunding. And if you're trying to go this route, you can consider Lending Club and Prosper. Those two are the platform for this. And next, we're going to talk about revenue-based financing. And it is an agreement where it's a company receives capital from an investor and agrees to share a percentage of future revenue until it's paid off. And for example, if I give you $100,000 for you to start a business, and some company might ask, "Oh, I make $20,000 a month. I'll give you $10,000 a month for 11 months for to total up to 11,000 like for to that to for example 111,000 to that amount." And this is quite common in sectors with high margin products like jewelry and predictable revenue streams because it's quite consistent because there's always going to be a need. And I think really relevant example for this for Gen Z and Gen Alpha people listening right now will be the drink Prime. I don't know if you guys have heard of it, but I think most of you guys will because it's created by two of the largest content creators, Logan Paul and KSI. And you see people buying so much, like than their selling price. You see people buying them for $20 for one bottle because, and this is basically a high margin product and it has a predictable revenue stream and it's growing. So they consider revenue based financing. That's just an example. And so, what are some benefits of this alternative funding? So, alternative funding can offer faster access to capital, simpler application process, and more flexible repayment terms compared to traditional funding. So, if you need money quick for an idea, so this is basically the way to go. And it can also help business tap into new networks and generate publicity and gain market valuation. For instance, if you go on Shark Tank, and do one of these methods, you immediately get publicity because it's just basically it's a stunt, kind of. And these methods does not require giving up in equity like some of Shark Tank's pitches, because some Shark Tank pitches are these type of funding, but some are mostly are, I give you $100,000 for 10% of your equity stake. This is not like that. It's more like, oh, I will just borrow you this amount of money and you just give me back a certain amount of money. It's more determined set. Again, the double-edged sword analogy, there are challenges to alternative funding. And it can be really risky because it's quite new and it lacks regulation currently. You see a lot of people going in jail for not doing this correctly because it creates a lot of fraudulent behavior, especially in the crowdfunding section, because a lot of times they just want to fool the public into giving them money. And then they end up pulling a Ponzi scheme or something like that and it fall through because of these funding methods. So they just end up going to jail and doing unlawful stuff. So don't do that. And businesses may face, high interest rates and like platform rules. For example, banks might ask you for 5% interest. This might ask you for 10% interest with the specific rules that you have to follow. And for example, if you do IPO, like the initial public offering, and you go onto the market for funding, you need to disclose all your business information. And even if you're not going to market, you have to disclose your business information as well. I mean, see, I'll correct myself. I think that is not a good enough analogy because you're kind of like you have your equity for money, but this you're not. So this is basically like if you want to get funding from other people, you need to present your idea. And since this is a really new idea, people might steal it. And you don't have to you didn't pay them or anything, they can just take it because they have the funding to do it. So why picking you? So that's the risk of that. And not all businesses and projects are suitable for these methods. And funding, I agree, is one of the most important things in a business, that you know how to fund it, you know how to get money. But success always comes with marketing, with branding. Those two are another big story to talk about because without those, your product might be the best, but no one will know you, so they won't even buy from you. So without those, with how much money you have, it wouldn't work. So believe you can be successful, and thank you so much for listening. If you have any business idea, just shoot me an email, and then we'll go into chat. See you next time.